Hello, welcome back to another video. Today's topic, we're going to be going over how to find daily bias, right? So this is how you find your bias for the week and just overall for the day. Not for the week for the most part, but for the day. But we have a few factors that go into it. So I'm just going to get straight into how I usually find it and tips and tricks on how you can find it. So the first thing you want to look for, the first thing you want to do is um probe order flow, right? See the direction where it's going. Are we disrespecting bullish PD arrays? Are we respecting bearish PD arrays? Which PD arrays are being respected and disrespected, right? And which lows are getting taken and which highs are getting taken, or just which liquidity pools are being left, right? So, second, and this is arguably the most important, these three are the most important, is your high time frame narrative, high time frame bias, and high time frame target. Are we looking for previous week's low? Are we looking for previous week's high? High time frame narrative. Why are we going to where we want to go? High time frame bias is where are we going to go? Right? These two go hand in hand, and then high time frame target is just the target for the higher time frame that it's trying to reach, right? Obviously, if we have a higher time frame target, then we know that, let's say our higher time frame target is right here, right? Prices, obviously, this might be Monday, right? Tuesday, Wednesday, Thursday, Friday, right? Price is obviously going to want to go and reach this high time frame target. That's going to be our draw. So eventually price is going to draw towards there. And that's how we can start to frame our daily bias, right? Now we also have weekly profiles, which I'm not going to get into that much, right? That's for a different video. We have our weekly profiles. We also have seek and destroy conditions, right? We have candle closes. We have seek and destroy conditions. And I'm going to show examples of all of these. We have the most important, which is also, I might put this in like places of priority. You also have candle closes. You have IRL to ERL. And then you also have discount to premium. Now, for those who are a little advanced or you've watched the core content of ICT, you also have your IFTA ranges. And then for time frames that you want to look at for your daily bias, mostly the daily, right? I don't look at the weekly that much. I don't look at the daily that much, even though it is daily bias. I usually look at the 4 hour and the 1 hour, and then also the 15-minute, right? So those are usually what I use. And then you have time frame order flow, synchronization. So I know this seems like a lot, but and I know I spelled synchronization wrong, but they usually all flow into one. So now I'm gonna show you basically and explain all of these, right? So high time frame narrative. Let's say let's say this is an IFTA 20 range, right? Let's say this is an IFTA 20 range that we want to target. And this is a low that's been left, right? And then we've been trading higher. So we left this low. This is our IFTA 20. We hit a high time frame PD array, right? Which is also internal what? Internal range liquidity, right? So this is how you can start to overstack these confluences. Let me turn the opacity down on that a bit. So we have it hitting this right here. This is a high time frame. High time frame IRL. And let's say this was coming from here, right? If you were to take a fib from here to here, you are now in a premium. You are in a premium. You're typing a high time frame PD array. So now, where else are we supposed to go? We're supposed to go for the external range liquidity, right? We're trying to go for this low after balancing this high in equilibrium. So let's say this is on the daily chart, right? If this is on our daily chart, we're going to expect the next candle to be a down close candle, right? It could leave a wick. Let me make that better to see. But we're going to expect it to be a down close candle, right? It leaves a wick. Let's say it leaves a wick right here. Just like this. If we close below on the daily, which is what I'm talking about for candle closes here, we can expect price to continue. If it closes above, like here, we can expect price to go and tap that PD array again. So that's what I mean for candle closes. And once we tap into that high time frame PD array and we have our narrative, why are we going to go there? We have it at the 20 range. Now we need to take out some sell side liquidity to continue the trend. High time frame bias, where's it going to go? To this IPTA 20 range and any of the low resistance liquidity that was built up, right? Let's say if we had failure swings right here. And then our high time frame target is the IPTA 20 range. You see how all of these go hand in hand? You're probing order flow. All these, right, bullish PD arrays are soon going to get disrespected. But all the bearish PD arrays, right, from within here are getting respected, if that makes sense. So now you have your weekly profile, right? So let's say that Monday just accumulated. Tuesday, we could get the tap into the high time frame PD array, right? Monday accumulated. Tuesday making high of week. Sweeping all the orders that were here, right? Turtle swooping all the orders that were here. And then we're going to continue lower. That's also weekly profiles. Once everything aligns, you can start to see price go, and displace lower before coming back to close for your weekly open, right? Price opens right here. You buy above at a time-based premium. You're buying at a premium. Let's say this is our weekly open, right? We have our weekly open. Oh, shoot. Weekly open right here. You're buying at a time-based premium instead of a time-based discount. You're buying at a price-based premium instead of a price-based discount. And you're buying at a weekly profile of Tuesday high of week, right? So you also have economic calendars that go into framing your daily bias. If you have news, you can expect which days to be manipulation to continue us towards our target, and then we will continue down. Now, this could be a weekly PD array, a daily PD array, but on the 4-hour, it's mostly going to look like more candles. So let's say it left a fair value gap, right? Let's say this is just Monday, and that's your high time frame bias for mostly the whole week. You want your high time frame bias for Monday. This is the 4-hour chart, right? It leaves this low. If price inverses this fair value gap, taps into a premium, and has every reason to go lower, and you know that the draw is lower, if price inverses this fair value gap right here, right, making it an inversion fair value gap, it's almost guaranteed we can go to this low. And then you start to frame your setup based on what the high time frame did. You pair it with the lower time frames, the 1 hour, the 15-minute. You see where you would want to enter and where you would want to exit. right? So this is what I mean by time frame order flow and synchronization. Now you have economic news calendars, and you can expect Monday to accumulate, right? Which is also seek and destroy conditions, which I'm about to get into right now. I'm not going to get into it that much, but let's say we have news on Tuesday and Wednesday, or we have news on Wednesday, Thursday, Friday, no news Monday and Tuesday. We can expect price to continue to be like this, right? Just continue to seek and destroy. And if we were to draw, if we were to draw our pip against it, we would see that price is just going like this. Oh, it's just going like this, right? It's taking out liquidity each time, just like this, while also making higher highs. It's really not going anywhere. In these conditions, it's less probability, but you also want to buy at the extreme, right? This is how you can tell if you're in seek and destroy conditions if it's doing something like this. So if Monday and Tuesday are accumulating orders, the only way you could go is you have to drop it to a lower time frame. So for seek and destroy conditions, I would recommend the 4-hour or the 1-hour. And in the 4-hour, 1-hour, you want to see high time frame PD arrays or any type of liquidity swept, and you're buying at this extreme, and you're riding it down to about, let's say, right here, right? Let's say right here, equilibrium, you're riding it down to about half of this range. Half of this range, equilibrium of the range, because then the price could always continue higher, or you're riding in the equilibrium runner for the low. But in seek and destroy conditions, you always want to buy at the extremities, right? And you want to get your high time frame to see that. But you could base when you're gonna get seek and destroy conditions on your economic calendar, and then get a high time frame manipulation into a key level, right? We accumulate. Wednesday high a week, Thursday drop down, Friday close, right? So y'all can see that here. Accumulation, manipulation, economic calendar. When Wednesday of the week, we close below these lows here with our candle, right? Target the IPTA range, sell side liquidity. Bullish P arrays are getting disrespected, and bearish P arrays are getting disrespected. We're above the weekly open. We could be above a daily open. We're in a time-based premium. We're in a price-based premium. All of these things factor in to how you're going to find your daily bias. So I know that might have been a lot. So I'm going to go over one chart example. This is NZD JPY, I believe. Yeah. And I don't know actually jack squat about this chart. So what we're going to do here, right? I can already see it right now. We're bearish. Why are we bearish? If I have to take this right here, let me turn off this indicator right here, right? Price, I mean, it already happened. But what did price do? Price turtle souped this high right here. It turtle souped this high. Ooh. Turtle souped this high right here. But where did it also deliver from? A high time frame PD array, a high time frame imbalance, right? Price delivered from a high time frame imbalance when? Wednesday, high of week. We probably had some sort of NZD news then that got this. If you know this is happening Monday and Tuesday, you have Wednesday high week sweeping, and you want to see this respected, then what do? We continue lower. But what is this also? It's not only premium to discount, it's ERL to IRL. So your next target could be the intermediate term low, the low that's inside this fair value gap right here, or just a fair value gap in general. And you can see that you get that decently right here, right? If we were to look, our next targets, if this fair value gap gets inversed, would be right here. And we could see this happening where Monday would accumulate, right? Monday could accumulate. Tuesday could hit this order block, making it high a week. Wednesday, we distribute, inversing the fair value gap, get a little retrace here, sweeping any type of orders that are in here, lower time frame, continuing lower, and then closing on Friday, if that makes sense. And like we said, we'll be buying above our weekly open. We'll probably be buying above our daily open before continuing to sell off. Time-based premium, we were to take the range from here to here. You'll also be buying in a premium of this range. And this is how you just start to synchronize it. You get a candle close, like I said below. You see how we didn't get a candle close above here? If we don't get a candle close above here, price is still bearish. We can anticipate moves lower, but we get a candle close above below here, and this is how you can tell that price is going down. You can see candle close below this low, continue. We didn't close below this low, we went higher. We didn't close above this high, we went lower. It's literally, you focus on the candle closes, you focus on that. If we were to take it into the 4-hour, we get a thick up close above this high. Tuesday would even sweep this high. Monday, for the most part, we were just slowly. Tuesday, boom. After it swept this external range liquidity, where did it go to? Fill this imbalance internal range. What is that also? It's in a premium. You continue lower. Price just swept this inside of imbalance. We can expect price to either accumulate or come to fill any of these imbalances before continuing to our final target. Now, we go back on the daily. Ooh, I apologize. We go back on the daily right here. And no. If we were to go back to our daily time frame, 20 bars below, right? Oh wait, not here. This is probably our 20-day look forward, which is how you know. I'm not going to get into interranges, but if you look 20 days forward, we can start to seek this low. And then, I mean, you just see it work perfectly here. So that's basically how you find your daily bias. If you guys are confused or if I could explain anything better, let me know down in the comments below if this helped you, anything I could dive deeper into. But once you start to see this and you start to practice it, I'm going to see if I could go and find those things again so you guys can take a screenshot, right? Once you focus on these things, now that I'm thinking about it. Once you focus on these type of things, you're able to know where price is going to go. So take a screenshot, backtest this in your charts, go and try and find it. And yeah,